Hello and good day, everyone. Today, we from Group 4, which consists of me, Muhammad Rafa Alhamdi, Rizqy Ariel Budiman, Desak Nyoman Putri Alicia Wedagama, and Rizata Desindra, are going to talk about our assessment theory of finance under the topic of stock market and the presidential election. Moving on to the introduction. This case study focuses on the fictional 2032 US presidential election and its impact on the renewable energy sector, specifically on SolarMax Energy Incorporated, a major company that heavily depends on government support. By examining how the outcomes of the election affect SolarMax's finances, stock performance, and strategic business decisions, we aim to understand how the company and investors deal with challenges of political changes from the outcome of the 2032 election.
I will begin this presentation by providing some background on the political state of United States in the year 2032. So first, this year marked a significant turning point in US political and economic history. The global economy is recovering for a decade of challenges such as first, rising inflation caused by the pandemic, second, an energy crisis driven by a global tension, and the third, the accelerating impact of the climate change. These factors have create both challenge and opportunity for the nation moving forward. So, next, let's take a look of the major political candidates and their key proposal for addressing this challenge. First, Senator Laura Green for the Democratic Party. She introduced the Green New Deal 2.0, a $1 trillion investment in renewable energy over the next decade. She also focused on the boosting renewable by increasing federal subsidies for solar and wind energy by 20% On the other hand, Senator Rich Harper for the Republican Party has a different approach. He emphasized reducing government spending by cutting renewable energy subsidies by 50%. And she advocates for energy independence by deregulating the fossil fuel industry to boost domestic production and reduce reliance on foreign import. Additionally, he proposed corporate tax cuts to encourage economic growth. These two candidates offer contrasting solutions for American future. And moving on the role of business in this landscape, let me introduce SolarMax Energy Inc., a key player in the renewable energy sector. SolarMax Energy Inc. focus on developing solar technologies, positioning itself as a leader in clean energy. The company has benefited significantly from government subsidies and favorable politics in the renewable energy sector. With its innovative approach and strong market perspective, Solar Energy Inc. has become one of the most esteemed renewable energy companies driving American transactions towards clean energy.
Company SolarMax Energy Inc. First one is financial overview. Annual revenue $500 million, operating expenses $400 million, net profit $100 million, subsidy dependency 40% of annual revenue comes from federal renewable energy subsidies. Second is strategic challenges. SolarMax are too dependent on subsidies, making it very vulnerable to policy changes. The company is considering a $50 million investment in increasing its production capacity to meet growing demand. However, this decision dependent on the 2032 election outcome. Third, market perception. Pre-election stock price $75 per share. Analysts estimate that the stock could increase to $90 per share during Green's administration but fall to $55 per share if Harper wins. Key question. First one is How would each election outcome impact SolarMax revenue, expense, and profitability? Second one is the 50 million expansion investment viable under both scenarios. Third is how will diversification into new market influence the company's financial stability? Fourth is what operational adjustments are required to maintain profitability under Harper's policies. Fifth is how will this change affect SolarMax stock price and investor confidence? Revenue analysis. First one is current revenue, $500 million, 40% comes from subsidy. Subsidy change, Green's 20% increase in subsidies, Harper's plan a 50% cut. Calculation if Green wins. First, base revenue 500 million, subsidy revenue, increase in subsidy revenue 20% multiplied by 200 million. Third is new market revenue $100 million. Total revenue 500 million plus 240 million plus 100 million is 640 million. Harper wins, base revenue $500 million, subsidy revenue reduction in subsidy revenue 50% multiplied by 200 million is 100 million. New market revenue 50 million. Total revenue 500 million plus 100 million plus 50 million is 450 million. Operating expense analysis. Net profit, total revenue minus operating expenses. Calculation. Green wins, operating expenses remain at $400 million. Profit, total revenue minus operating expense is 640 minus 400 million is 240 million. If Harper wins, operating expense reduction, reduce operating expense 75% multiplied 400 million is 300 million. Downsizing savings is $10 million. Harper's scenarios include a downsizing option, saving 10 million annually. Profit after downsizing, net profit plus cost saving from downsizing Harper. Profit after downsizing, substituting values profit 450 million minus 300 million plus 10 million is 60 million.
Okay, now I'm going to explain about the investment analysis. For the investment analysis, we are going to calculate the NPV. The NPV means net present value. To calculate the NPV, we have a formula. The formula is cash flow in year T divided by 1 plus R to the power of T minus the initial investment. For the T is the year and for the R is the discount rate. Now, after we calculate, if Green wins, the NPV will be 758.61 million. And if Harper wins, the NPV will be $0. Next is the stock price analysis. To calculate the stock price, there is a formula. The formula is EPS times P per E ratio. And the Green EPS is 3.33. For the Harper EPS is 10. So if Green wins, the stock price will be $80 per share. And if Harper wins, the share will be $50 per share. Now, in conclusion, the SolarMax Energy Inc. case study underscores the relationship between political uncertainty, market dynamics, and strategic financial decision making. As the 2032 US presidential election presents two dramatically different policy landscapes, the SolarMax must navigate these challenges with agility and precision. Through detailed financial analysis and scenario planning, The company can align its strategies to maximize opportunities while mitigating risks.
Okay, so that's all from us. We hope you learned something, and as always, see you guys in the next one.